Okay. Let's go ahead and get started. And the first part is just a quick intro, so folks will keep rolling in as we get through that. So, hi everyone. My name is Nikhil Agarwal. I'm going to chat about personal finance for incoming MBAs. Right. A lot of the content on this presentation is tailored for U.S. citizens, U.S. permanent residents, and international students with a U.S. cosigner. But if there are questions that come up for students who fall into other categories, just use the Q&A feature, and we can certainly talk about it. Okay. First, I need to start with a disclaimer. Juno, myself, we're not an investment advisor, financial analyst, or anything like that. So for specific advice, you need to consult your advisors. So I'll do a quick intro. We'll talk about budgeting for business school because that's really important. And that will naturally lend itself to the conversation on student loans. And then I'll leave the rest of the time for us to, chat about any questions on your mind. And feel free to pepper me with questions as they come up. I might not answer it right away if I know the answer is later in the presentation. But feel free to add them to the Q&A board, and I'll try to make sure we clear every single question on there. Okay, so quick introduction. My name is Nikhil. Currently, I run a company called Juno. Juno is a group bargaining for student loans. Become an expert on student loans over the last 5 years. Before that, I did my MBA at HBS, obviously a lot of fun. Before that, I spent 6 years at Boeing designing next generation airplanes, and I did my undergrad at University of Illinois in aerospace engineering. So that's my background. And really how all of this started, you think of an engineering guy, went to business school, how do you end up running a student loan company? It's really because I needed student loans for myself. I posted this little message in GroupMe we used to use at the time. And we came up with this concept of like, okay, shall we go group negotiate our loans? And we did that, and the results were kind of amazing. We were able to save each person about $13,000, $14,000 on their loan. And that was extremely well received. We did over $25 million of loans that year. This is with $0 marketing budget, a Facebook group, right? It's kind of insane. And today, about 25 to 50% of incoming the class is participating in Juno, right? With over $700 million of student loans right now. So, generally the MBAs are working through Juno for their student loans. Okay, so let's dive into budgeting. Budgeting is a very interesting topic because if you were to undergrad in the US, you typically saw something like this, a cost of attendance. Maybe you were not paying attention, but your parents certainly saw a cost of attendance chart. And for undergrad, you can pretty much, follow that cost of attendance chart, and it's very accurate, right? A lot of people spend exactly that much, and you don't really have to think too much about it. In business school, for whatever reason, the reason is trips, social life, clubs, and stuff like that. But for those reasons, a lot of people end up spending more. Okay, so yes, it is possible to have a good business school experience within the budget described on the cost of attendance of your school's website. But the average person, the median person attending business school, is spending more than what's described in the cost of attendance sheet. Okay. So as a quick example, this is Harvard's from class of 2022. So this is a little bit dated. You can tell I've been giving this presentation for a bit. Even back then, it was impossible to find a 9-month lease to begin with. You had to sign a 12-month lease. In fact, I stayed in Harvard housing, and I still signed a 12-month lease. So even the school doesn't offer a 9-month lease. And I was married. I was paying $2,600, I think. So close, but still I had to account for a 12-month lease, right? So there are things like this that get you. And then living expenses, certainly we were spending way more than $2,200 a month, right? And, we were fortunate. My wife was working, so we had some income. We felt the liberty to spend. But at the same time, a lot of our peers, even if they didn't have the income, they were spending, equivalent to us. So there's two ways to go about this. If you just take the cost of attendance at about $15,000, you could use that number as sort of a rough rule of thumb. Or a better way is to build your own estimate, right? So there's a quick sheet here that lets you think about each category of expenses, and you can fill it out and try to estimate, okay, these are the kind of expenses I'm going to incur while in business school. The two big factors that will change between people is how many trips do you end up going on while you're at business school, and then how much do you spend on food and alcohol, right? And this is really a very, very wide range. You really have to think about your own behavior and how you might, engage in these activities. Opportunities are going to exist every weekend or every other weekend. There's going to be an opportunity, right? So the opportunities are there. It's up to you to decide how many you're going to participate in, and what type, right? You might, stay on campus, have an amazing weekend. You might travel to the Alps and go skiing and have an amazing weekend, right? It's very likely you're going to have an amazing weekend. The just question is, how much are you going to spend doing it, right? And then similarly on food and alcohol, right? Some folks are very disciplined. They have a grocery budget and that's about it. Some people are eating out every day, every meal, regularly having a good amount of alcohol, and then that can add up pretty quickly. Okay, so something to think about in your budgeting exercise. And usually at the end of this, filling out this estimate, folks decide, oh, I need a student loan. Well, a lot of folks have already decided they need a student loan, but if they didn't, sometimes they end up thinking, well, I might need some money from a student loan. Okay, so let's talk about student loans, how they work, what are your options, that kind of stuff. I got a question for the estimate. So it's juno.us/MBA-estimate. Okay, and if one of you don't mind putting that in the chat, I would really appreciate it. I don't have the hands, I guess, to do it right this second. Okay, so student loans, let's talk about that a little bit. So the process, the way it works is you usually apply for student loans once per year in the summer prior to the fall semester, right? So in 2023, you'll apply for the loan that covers fall 2023 and spring 2024, okay? And then in the next summer, so in summer 2024, you'll apply for fall 2024 and spring 2025, right? So you apply for the academic year. The way the money gets dispersed is once per semester, or if you're on a quarter system, once per quarter, right? And so you're not charged interest on the entire amount as soon as you apply. As the money gets dispersed, that's when you're getting charged. So even though you could theoretically apply once per semester, there's no advantage to doing it that way. So that's kind of, and the vast majority of people just apply once per year. Okay, and you cannot apply for 2 years at once. There's no application form you can fill out and indicate you want 2 years worth of loans. It just doesn't exist. Okay. Now, one of the things, we spoke about doing your expenses and figuring out the loan amount. It's possible you get the loan amount wrong, right? It's totally possible you underestimate or overestimate, and these things are fixable. It's not a big deal, right? Now, it's easy to fix if you've borrowed too much. You simply log into the portal, make a payment, and you've sort of paid back a certain amount. Okay. Now, the way to increase the loan amount middle of the semester, if you need to, is just to apply for an additional loan for how much more you need. One of the things you want to be careful about when thinking about the loan amount, how much you want to borrow, is there is a limit. Okay, and that limit is the cost of attendance published on the school's website minus any scholarships, employer sponsoring, all of that stuff. Okay, so that's the maximum you can borrow through student loans. Now, I just told you a minute ago in the budgeting section that, hey, you probably will end up spending more than the cost of attendance. So if you're in a position where you don't have a lot of savings coming into school, that's a little bit of a tough spot, okay? Because the amount that you might need above the cost of attendance, the easiest place to get that money from is from a savings account or a checking account that you have, okay? You're not going to be able to borrow through a student loan for that. Now, before this week's financial crisis at First Republic Bank, there used to be an option there, but that option is likely, going away. So that that doesn't exist anymore. There are a couple of other strategies people take if they need money above the cost of attendance. For example, they will take a credit card. Specifically, they'll take a 0% APR credit card, and then they'll take that credit card, they'll use it for the year because it's 0% for like something like 12 months. And then during the internship, they'll pay off the credit card, get a new credit card that's 0% for another 12 months. And then they'll pay off that credit card as soon as they graduate, right? Now, the reason this is risky is if you don't land your internship, or if you don't land your full-time job in a timely manner, the bill can add up very quickly, right? These credit cards often have a very high APR once they're out of the 0% period. 22% is not unusual, for example. Okay. Now, the other thing I want to talk, we're talking a lot about loan amount, okay? The loan, I don't want to cause people any stress, right? This is a chart that shows how much students have been borrowing from Juno, right? So this is just the amount they borrow from Juno. A lot of students borrow an additional $20,000 outside of Juno, okay? And you'll see why sometimes students borrow $20,000 outside of Juno, but this is the amount they borrow from Juno. And this is per year, okay? So the median person is borrowing somewhere between $60,000 and $70,000 per year from Juno. So they're graduating with 120 to 140, 150K in student loan debt. Okay, so that's sort of the average. Now, if you're coming in sort of zero savings, etc., you might skew all the way here, right? 100K, 110K, and even there you're not really alone, right? More than 5%, 6% of people are borrowing above 100K each year, right? So they're graduating with 200K of debt. Now, I don't have any data to show this, but anecdotally, I understand that MBAs tend to pay off their loans in about 6 years after graduation, right? So they are, and I'm not talking about someone who's being super aggressive with their student loans, putting every dollar towards their student loans. There are a few people who paid off in like 2 years, 3 years, okay? Those tend to be international students because they end up with higher interest rates. So they really, really are motivated to pay off those student loans as fast as possible. But sort of living an average lifestyle, you are able to pay off these loans. The previous classes have been able to pay off these loans in about 6 years. So at least that's what I hear anecdotally from lenders. Okay. The other thing to talk about is stocks, right? Checking and savings accounts balances, that makes sense. I generally encourage people, if they have the option, right? It's a luxury, but to have some kind of an emergency fund. You don't want to graduate with $0 in your pocket, right? You want to make sure you have $20,000, $30,000, maybe $15,000 at least. So that way, any move you have to make is easy. Any transitionary period, if the job market is weak when you graduate, you can manage those things. Okay. Now the other question when it comes up is selling stocks, right, to pay for business school, and that's a very interesting subject, right? So it's really hard to give an answer. I think in earlier it was 2 years ago it was easy because interest rates were so low. It was almost a no-brainer. You'd never sell your stocks. Some people would go the other extreme where they would borrow as much as they could because they wanted to go put the money in stocks, right? But the current interest rate environment is a little bit more challenging, right? You really have to believe in the stock market to say, I'm not going to do this, right? But there are some things you need to take into account before you go liquidating a stock portfolio. The first is your tax hit, right? Anything, if your stock portfolio has grown, right? And generally those are the folks who are more tempted to pull money out of the stock market, is you're going to pay cap gains tax, either long-term or short-term, depending on how long you've held these stocks. And that, you're taking out $1, but you might only be receiving 80 cents, right? And that's a 20% loss, right? It's much better to pay an interest rate for a year or two than that, and then your base for growth in your stock portfolio is also now lost, right? You've taken that money out. So it's not an easy decision. If you have to do it, you kind of do it, but it wouldn't be the first place you reach for, and I double down on that from a retirement account perspective, right? If you're thinking of pulling stocks from like a Roth IRA, that's tough, right? Like you're never going to be able to put that money back in, and likely, it's you're basically losing, maybe 30-40% from a value perspective, right? You'd have to talk to, you have to make a lot of assumptions regarding what my income level is going to be when I retire, etc., to get a firm number. But certainly, it's a very large percentage if you pull money out of a Roth account. Okay. All right. Because we are young, right? We have a lot of years for that compounding to take place. Okay. So with that, let's talk about where you can borrow from, right? So far we've been talking about, how to figure out how much you can borrow. Oops. Now let's talk about where you can borrow from. So the first thing that comes to mind is federal unsubsidized loans. Okay. The first thing I'll say is the federal loans that you took for your undergrad education, those are not available to you anymore. Okay. Federal loans for undergrads and federal loans for grads are very different. So these are the options available for grad school and MBAs. So if you go the federal unsubsidized route, you can borrow a maximum of $20,500. The interest rate was 6.54%. Now it's going to become probably close to 7.1%. That's our guesstimate. We are going to know in the middle of May. So in another 15 days or so, we'll know what this number is going to be. But currently, our guesstimate it's going to be 7.1%. Okay, and you pay a 1% origination fee. The federal Grad Plus loans, you can borrow up to the cost of attendance. So great, you can borrow how much ever you can borrow from any student loan category. The interest rate is higher, 7.54, likely going to be 8.1 this year, and a heavy origination fee of 4.2%. Now, the thing to think about when you see origination fees is how do you compare that, right? And if you go to Google, the popular answer is, compare it to the APR, right? It's funny, the federal government is the only lender that doesn't give you an APR. I can calculate it for you. It's something like 9% on a standard calculation. But it's not real. That 9% is not real. The reason is because a lot of students will refinance their loans after graduation. Okay, so really what happens is it's almost like taking that 4.28%, dividing it by 2 for your first year loans, dividing it by 1 for your second year loans, and it becomes like 11%, right? Or 9% as an interest rate, and that's really high. The origination fee is not something you pay, but it's deducted from the loan, right? So your loan balance on day one might be $100,000, but the school may only receive $95,000, right? And that difference is the fee that they've charged you. So it's not money that comes out of your pocket, but it's money that gets reduced from the loan before being sent to the school. Now, private student loans, there's a lot of them, so I can't, give you sort of exact specificity, but that's the world we dabble in, right? That's the loans that we negotiate. Really hard to negotiate with the federal government. You've got to go talk to Congress. But private student loans, private lenders, we go negotiate with them and we get you rates that are lower than your alternatives, right? So now speaking specifically to Juno members from all of the previous classes, right, from 2018 to 2023 or 2022, every year we've been able to get a rate that's below the Grad Plus rates, and half the times below the unsubsidized rates, half the time not below the unsubsidized rate, with no origination fee, right? So it's attractive from an economics perspective, right? For the amount you owe on the loan, it's attractive. Otherwise, there's no reason to take a private student loan. If you get a private student loan option, if you're eligible for the federal loans and you get a private student loan option that's more expensive, just ignore it. There's no point taking that loan. Okay. But the reason you might still take a federal loan, even if you get a cheaper private student loan, is these two benefits I've written at the bottom, right? Public service loan forgiveness and income-driven repayment plans. Now, these tend not to be very popular features for MBA students, but I mention them because they are important features in the broader context of higher education. So public service loan forgiveness and income-driven repayment plans both sometimes work hand in hand, sometimes work by themselves, but I think of both of them as insurance in some way, right? You might be paying a higher interest rate or origination fee, etc., but you get these two features. And what these features are is if you pursue a public service career for long enough and make less money while doing so, at the end of it, your loan gets forgiven. Okay, you might still end up with a tax bill, but for the amount that's forgiven, and that's a topic for you to discuss with an accountant. But your loan balance gets forgiven, right? And that could be a pretty incredible feature for someone having the right career, right? Now, income-driven repayment plans, separate from public service loan forgiveness, but sometimes used in conjunction, is just sort of directly related to income, regardless of what kind of career you're pursuing, whether or not it's considered eligible for public service loan forgiveness. Income-driven repayment plans help you, manage your lifestyle or your income and make sure you're not paying too much towards student loans when you're trying to make ends meet. Okay, so you can read up about both of these programs in more details. Generally, many MBAs are pursuing careers where they sort of don't care about these features, right? And if that's you, then it's easy, right? It's numbers. You can compare the cost between these two. And we've built a calculator that helps you understand the impact of this 4.28 and 1.08 origination fee and allows you to compare a private student loan and a federal student loan on a cost basis. Okay, so feel free to just send me a note. I should have put the calculator on this page, but I have not. My hello@joinjuno.com, shoot us a quick note and we can reply to you with the calculator you need. Okay. So yeah, those are your loan options. For the federal loans, you fill out the FAFSA, you speak to your financial aid office. For the private student loan, you apply through someone. Well, we hope you apply through someone like us because that's where you're going to get the lowest rates. So just as a summary, reasons to select federal loans: if you're doing public service loan forgiveness, so you need to use the income-driven repayment plan, federal loans is the way to go. If you're optimizing for the cost and your private student loan option is more affordable, then you can use a private student loan. And here we go. juno.us/MBA-loans will give you access to this calculator. I am going to update this calculator shortly with a version that accounts for if you refinance after graduation. Because right now, this calculator shows what the APR would be over the entire life of the loan, 10 years. But in reality, you are more likely to refinance after graduation, at which point, that origination fee is a very heavy impact on the cost. Okay, so I've been hinting Juno this whole time. Let me quickly talk about what we do, right? So before Juno, each individual would go to 4 or 5 banks, shop around, get the best rate they could, and take that loan, right? What we do at Juno is we say, okay, let's all of us get together, right, under the Juno umbrella. And then Juno goes and negotiates on your behalf with all of these banks. And we say, hey, whoever is going to offer the lowest rate, get all of our business. Okay. Now, we say that, but there's no commitment from you. When you're standing under the Juno umbrella, it's just like signing up for a mailing list. There's no fees. There's no commitment to take a loan from the bank that we negotiate a deal with. Nothing. It's just, hey, I need a student loan. Let me know what you negotiate. That's kind of all you're doing when you join Juno as a member. Okay, and then we use that. We basically create this spreadsheet of everyone's data. We remove all the personal information, but all the rest of it is there, and we send it to all the banks, and we say, hey, send us bids. We want to know how cheaply you'll offer rates for our members. Okay, so we'll select one lender, we'll highlight it to you, and then you can decide whether that's your best option or not. And you can still shop around and see whether this is the best option. It generally is. Okay, so where does the discount come from, right? The first thing is lenders have insane marketing budgets. So if you go to Google right now and you type private student loan, you'll get a number of websites where there's a list of lenders, right? And people pay like $25 for a click on one of those links. It's kind of insane. Some lenders have offered us 8 to 10% of the loan amount as a commission if you decide to take a loan, right? That's absolutely insane. Can you imagine you take a loan for 50,000 and someone gets paid a $5,000 commission? So that's insane, like I said. So at Juno, because we don't charge these kind of commissions to the lenders, lenders can say, okay, I'm going to save so much money on my marketing. I'm going to put that into the interest rate. I'm going to reduce the interest rate because I'm saving so much money on my marketing budget. Okay. Now you have to think about, okay, wait, how come Juno doesn't have to charge that much? Why is it easy for Juno to get members? Well, the reason is you. People join Juno because 8 out of 10 people join Juno because they hear about it from a friend. We are loved in the space by folks like Poets and Quants and a number of other partners who understand the value we provide to MBAs, and they don't charge us too much. So as a result of that, we are able to get in front of you much more easily. And obviously the value prop we offer is very nice, right? You join something for free and you save like $15,000 on your student loans. Who doesn't want to do that? And lastly, it comes from volume, right? So if we think about the average lender out there, right? There's a few big guys that do a lot of business, but 90% of the market, 95% of the market, they're doing half of what we do, right? Half of the volume we can drive. And as a result of that, the decision they have to make is, hey, can we put in front a very aggressive offer so that we double our business this year, right? And that's a very attractive proposition for anyone. And that's why they bid aggressively for our business. Last year, we were able to negotiate something pretty incredible, the lowest student loan rate guarantee, okay? And on top of all of this stuff, most people just got the best rate right off the bat. But if you didn't, if you found a lower rate somewhere else because, you were shopping around and somehow someone gave you a better rate, our lender would match the rate, and on top of that, we would give you a check, basically making sure there's no way for you to get a better deal outside of Juno. Okay. That's all. So I spoke, wow, look at me, 12:30, beautiful. What questions on your mind? How can I be helpful? So I'm seeing a question here about any differences for international students. Yeah, so for international students, unfortunately, these federal loan options are not available, and the rates tend to be higher from the private student loan providers. We will be having an option for international students this year, but honestly, a lot of international students have already figured out their student loans because their visa process often requires them to act very early. Prodigy and Empower are the two leading lenders for international students. And then we hope to bring an option by June 1st or so, June 1st, June 15th to the market. But we suspect that's more useful for second-year students than first-year students. How does one join Juno? You just go to joinjuno.com. That's our URL. So yeah. Can Juno provide loan amounts above the cost of credit? No, Juno right now only does student loans, so we're not able to provide loan amounts above the cost of attendance. You could get personal loans, but that's not something Juno offers today. We are looking into it, but we don't offer it today. Yes, we do offer loans to international students with US co-signers, and we expect to start providing loans to international students without US co-signers very shortly in the next month. Do you suggest taking out loans once a year without selling assets to pay for the loans? It depends on the asset, right? Certainly, if you have money in a stock portfolio, it's not appreciated, maybe it's lost value because of the recent market conditions. That could be a portfolio that's worth selling, right? If it's a sort of standard brokerage account. It depends also the interest rate you get. Some people are still going to qualify for like a 5% interest rate, right? If you qualify for like a 5% interest rate, yeah, I would not sell anything. I would borrow as much as I can, and at least that's my personal opinion. I would borrow as much as I can and invest it smartly. I it's a little bit more of an advanced strategy, but what I personally do, right, is try to think about, if I can get cheap debt, I'm going to take every single dollar of it I can, right? And because I'll always find a place to invest it that's better. Like currently I've been looking at real estate a lot, and it doesn't take as much money as you might think to get started, right? There are several platforms where you can invest, $5,000, right, for example, and you have to decide whether you're okay with that risk. It's from an academic perspective, any financial academic person would tell you that's a stupid thing to do, because just because someone offers you a 15% interest rate and you get debt at 9% doesn't mean you should take debt at 9% and put it into a 15% investment, because the risk associated with each might not be the same. And certainly taking a loan is effectively risk-free. You have to pay, you're very likely to pay that money back, right? Versus if you make an investment, you could lose all the money, right? So it's not an academically correct decision, but I guess for my risk profile, I'm happy to make that decision. But yeah, it's a very personal choice. Does the URL from the MBA loans allow us to calculate different repayment periods and how we could optimize paying down our loans? No, that's what I'm trying to add, right? So what I'm trying to add to I'll get an upgraded version of that calculator out there, because it's more important this year than it has been in previous years. But essentially what that will do is it will show, okay, if you refinance in X year, right, what's the cost difference up to that point? So, and if you have very specific questions, some scenario you're trying to do or some kind of calculator you're trying to build, just shoot me a note, hello@joinjuno.com, and I'm happy to do the math with you. I do this all the time, so anytime, happy to help. Okay, not seeing any more questions come in, so I think we can start to wrap up. Yeah, it was a real pleasure meeting everyone. Feel free to reach out to me, hello@joinjuno.com, and best of luck with if you're already admitted, best of luck with the start of school. The first semester is a ton of fun. If you're in the process of waitlist or getting admitted, etc., best of luck with the final stages here, and let me know if I can be helpful. I'm always happy to help. Yeah, federal loans are for US folks. And here's a question about how long the loan approval process. Loan approval can actually move pretty fast if you provide all the documentation and information requested. It's not unusual for it to be less than a week. For US folks, it's often the same day, right, or instant. Sometimes it's 3 days, but it can be very fast. I will add the disbursement doesn't happen in a week, right? So you might get approved and everything is set, but the disbursement happens on the day negotiated between the school and the lender. So the school actually dictates when the money moves, and that's totally up to the school. Yeah, so the school's financial aid office decides when the money. What may be required from the international student for the private student loan? It depends lender to lender. Yeah, that's a tough question to answer. Some want collateral, some don't want collateral, some yeah, there's just a very wide variety for that answer for that question. Depends on the school you're going to. Sometimes some schools have a relationship where nothing is required, basically just you attending the school, and that's about it. All right, I think we will wrap.